So I wanted to film an overall update, and what better place to do it than here at the Driftwood, the project and the thing that's been defining my life and my career for the past several months, really almost 8 months since starting to work on this. This is one of, if not the most critical times that I've faced in my business since starting. Financially, it's a very important time to make sure I make everything work. The key thing to understand is in a real estate development business, one of the most common ways or the most straightforward ways that you get paid is on active projects. Active meaning post fundraise, pre-launch. In that period, typically you are able to get fees, either an acquisition fee, development fee, project management fee, and then there's also an opportunity if you provide services that would otherwise be hired out to contractors. The project needs an interior designer, a creative director, a branding agency. If your service is of the same quality as whoever else you would otherwise hire, there's also an opportunity to get those fees. I would say those ones that I just mentioned are less common because most real estate developers primarily focus on development, which is the development management fee, and then maybe project management. A lot of doing the creative direction, or more so doing the branding and doing some of those other more ancillary creative services, has been out of necessity for me to basically, out of these active projects that I've had going over the past 3 years, get as much as I can. As bad as that sounds, I'm certainly delivering the value of that service to these projects, but I've had to stretch and learn and bring on subcontractors and do whatever I can to deliver that service in order to get that revenue. Of the 4 projects that I've really had since launching my human capital, my real estate development business, Driftwood Motel is now launched. Fees are now done. I was getting a project management fee lumped with creative direction, the two together. I have the Hotel Pearl. That fee is set to end at the end of October. It's now about to be August. And I have the Boulders. That fee is ongoing. That construction hasn't started, and there's a bit longer of a timeline there. But that fee is milestone based. I have a milestone coming up soon, but the next milestone after that, which is I believe 50% of the way through construction, that likely won't be for another 4 to 6 months, I would say, after this next milestone, which is getting the project permitted with the county that we're building it in. And then I've had Oxido Sedona. And I say had because I really was only getting paid a fee the first year when we raised an initial amount of money to fund the acquisition of the land and then pre-development, including architecture, engineering, and my project management fee. After that first year, the cap stack changed. We had new investors come in and old investors come out. We were financing it differently, not to mention that the initial architecture and engineering, the project management responsibilities had come to an end. There was about a year of just transition between the old investors and the new. And then the past 6 months has been trying to structure a deal with these new investors. The last 18 months, including that first year of the transition, it's been very slow. I almost have put Oxido just sort of totally off to the side and haven't underwritten it for any amount of revenue, but have tried to push it forward. I think now is the first time I'm admitting that I am not sure that it's going to go forward. And it's a tough situation to explain why. In its simplest terms, in order to get a project done, you can work backwards, right? If you need to build a piece of real estate, you need to raise capital. If you need to raise capital, you need to have projections. You need to have a clear, concise investment offering. You need to have materials prepared to show potential investors. Most of all of that we have done, and we have done up until this point. But a critical piece is having construction budgets, construction timelines, planning done to the point where you can answer investor questions. Your financial underwriting is of a certain degree of confidence that you can confidently say to your investors, this is how much it's going to cost, thus this is how much it's going to return. All of these things, after we got out of this sort of initial transition phase with our new investors, were very difficult to do because we never got the initial architecture and engineering past this sort of conceptual point, which is not enough to get accurately priced by contractors. We were always going off of very rough estimates, either internally or then eventually brought in a contractor to estimate. But these conceptual plans, even with a contractor, they're not very accurate. And most importantly, they came back very, very high. Not high enough to kill the deal, but the returns certainly weren't great. We felt confident the cost should be lower, and we didn't have that level of confidence to take to market to investors strongly. I think all those things together has just held us up from going to market and seriously making a push to raise investor capital. In order to get all of that, what we really need to do is pay for the next phase of architecture and engineering, get it all the way to construction documents. This is in the range of $250,000. We're about $2 million into the project, including land, maybe $250,000 in already, including the initial stages of architecture, engineering, project management, studies, legal, etc. One more thing, the reason why I would say this would not usually maybe hold a development up, but because one of our partners has a term requiring that the whole thing get financed with cash, no debt, I think that has added a layer of complexity and difficulty that's not typically there. So we'll put that aside, but I'm adding that in. That additional $250,000 to take the next step, that's a lot to ask of investors. You're putting in at-risk capital because after you do that $250,000 and after you get the architecture and engineering done, anything can happen. There's an added layer of risk that you don't even raise that next layer of capital to construct the project. If we were to raise all the construction capital at once, there's far less risk that anything is going to happen to stop the thing from being seen through. If me or my operating partner Lauren were to fall off the project's capitalized, it can hire other project managers, creative directors, interior designers. We're not going to walk away from the project more likely than not. There's just this risk gap there. And typically when projects do this sort of phased approach, acquire land, raise a little bit more capital to do the planning and pre-development, then go to the next phase, there's a value creation there, typically in the form of permitting and entitlement, that when you're raising that initial stake of capital from investors, that early added risk capital, what you're telling them is, hey, with this creation of value, we're going to have an immediate appreciation or an immediate bump of X before we roll into that next phase and we raise capital. That's how you compensate for that risk, that increased risk. It's difficult on this project because we're not doing any permitting entitlement. It's not needed. What we're building is branded short-term rentals. We're building in a single-family zone under the single-family short-term rental permitting and licensing. It's a very interesting situation in there. Point being, there's not a pitch, at least as strong of a pitch, to say we're going to increase the value. We're going to appreciate your shares or your ownership by X before we transition to the next phase. The argument is, with plans in hand, there is some value created there because you could sell the land to another developer with this specific set of plans done, construction ready, potentially permit in hand plans, but it's a harder argument to make. That's a long-winded way of saying it's difficult to do. And I have to add, our partners who control the land, they also want to go about it in a certain way with a certain group of investors, which makes sense. And that limits our pool of investors. And it's not as simple as just going out and finding capital from any source. We have a controlling source of capital, a family office that we've partnered with for years, that I work with closely on the Boulders as well. So it falls within their solution set is the parameters. And we're exploring that and have been. But just recently, I felt the wind go out of this deal sails. Deal fatigue is real. When you don't have momentum, it's very hard to keep things moving forward, especially like I'm talking about. I'm in a situation where I'm building a development business where revenue is unstable and extremely necessary to build any sort of business, and diverting a ton of my resources to a project that hasn't had revenue for over a year and a half, that has no prospect of immediate revenue in the near future. Likely, if we were to raise capital for this interlude phase, there wouldn't be fee revenue coming out of it still. So it's unfortunate. I'm questioning, if I had the resources, if I could devote myself to that project, could I keep it alive? Could I make it happen? But the reality of the situation is, for example, taking on the Driftwood project, I did get inspired by Bay St. Louis. I did want to do this project from a creative standpoint. I had a vision for it. I also needed a project. I needed revenue. And that is exactly what brings me to the point in the main substance of this update of my life and my company right now. And that is, I've realized from day one, because I had the opportunity to work with smaller development and investment firms early in my career, this situation that I'm in, needing a project, is one I never want to be in. And the solution for that is to have an operating business that somehow produces enough revenue and cash flow that funds your business and ideally funds your life then as the principal and employee of that business, and does so in a way that doesn't take too much of your time, that you can devote your time and energy to projects which very often don't have revenue coming in until you can get them planned and capitalized. The only reason I had revenue on Oxido, for example, early on, before planning and capitalization, is because of a unique deal structure I set up, and I think a very unique investment situation, just because I was young and there was no other way that I was going to move that project forward unless I had those investors put in that additional capital to fund my project management fee, which they knew. So that is the point of this update: operating business and how to make that work. And I've gone over this story before and I don't want to beat it dead, but right before I started this development business, I read The 4 Hour Work Week, which gave me the idea to make that operating business digitally native or online, because that, I think, is the only place where there's opportunity to hit a level of automation and autonomy without needing a ton of employees, which takes time. To build a team and to manage a team takes a lot of time. Even if you're no longer doing the work of that business, building that team, managing that team, there will always be a significant workload needed from the founder, always, until, from what I've seen, a very critical mass at a later juncture. What it seemed like to me, and what it still does seem like to me, is in some online businesses, some tech-native, tech-based businesses, it's possible to reach that level of autonomy and automation earlier. Now, what I'm finding after 3.5, 4 years of trying to build this and make this a reality, it's not easy. I never expected it to be easy. I wouldn't even say I expected it to be simpler than it's been, but it hasn't happened yet.